Yo, chat, are we live? Are we good now? Mic check. Can you guys let me know in the chat if y'all can hear me? Fire. Fire. All right, cool. Cool. There's like a pretty considerable amount of stream delay. But it's all good. It's all good. It's all good. We'll make it work. We'll make it work for today. I'm gonna play tunes for a little bit, for probably like the next 5 minutes while more people trickle in. Feel free to blast this link out to whoever you'd like. This is, obviously open to the public. We're streaming this directly to YouTube, so anybody that wants to trade FOMC live or that you think might want to trade FOMC with us today live, feel free to go ahead and send this link out to anybody and everybody. But yeah, man, I'm gonna play some tunes. I'll put like 5 minutes on the clock here, and then we'll officially dive into it and get started about 20 minutes before the actual release. And it's gonna be a good session, ladies and gentlemen. Drop in the chat where y'all are tuned in from. Let me know.
it's just a stain on the floor. You don't understand it.
Alrighty, ladies and gentlemen, it's time. It is time. How are we feeling, everybody? Trust you're all doing phenomenal and having a good week so far. This is my second live session of the day. Some of you had the opportunity to tune in for the New York session this morning, live New York session inside of Primeverse. It was great to have you all there, and excited to be here again with everybody publicly for FOMC. And so hopefully you're looking forward to today's session, man. If you haven't already, drop in the chat box where you're tuned in from. All right, I'm going to shout you guys out for where y'all are tuned in from, as always. We got, let's see. We've got, yeah, the date was wrong, by the way. I had to go in and change the date because it was for the 19th instead of the 18th, but we're here. We're live on the right day for FOMC. Let's go. We got, let's see, Northern Ontario in the building, Dublin, Ireland. We got Philippines, Germany, LA, Edmonton, England, California, Nigeria, Birmingham. What's going on? Birmingham. We got, let's see, Mauritius, Netherlands, Sweden, Barcelona. Amazing. Saskatchewan, the UAE, Niagara Falls. Cool, man. Let's go. We're worldwide today, ladies and gentlemen. Winnipeg. Fantastic. Toronto. Awesome, guys. Well, I'm looking forward to today's session. I'm sure you guys are as well. And New Zealand as well. Cool, man. Couple of things. First things first, if you've never traded, a high-impact news event like FOMC, live before, with me, or maybe you've done CPI before, NFP before, but you've never done an FOMC session with me, the first thing I'm going to say is this: you have got to trade with proper risk management when there's high impact news, and you really got to trade with proper risk management regardless of whether or not there's volatility to be expected as a result of a red folder news event. So please do yourself a favor, okay? Remember that none of what I'm going to be sharing is financial advice. And I'll be encouraging everybody in real time, if we do decide to execute any trades, to use proper risk. In fact, use reduced risk from what you normally risk on every single trade. It's good to use reduced risk on a news day like today, because the news can be sporadic, spontaneous, unpredictable at times. And although we have a pretty good, I would say, a good solid degree of accuracy in anticipating news events and the releases and what news is likely to do, there's still things that we aren't necessarily always accurate on when it comes to news event anticipation. And so definitely keep that in mind. Use proper risk, use reduced risk, in fact, and none of what we're going to be sharing today is financial advice, as always. But with that being said, man, let's go ahead and dive into the charts. Let's go ahead and dive into the session formally, and get right into things here. So, we got the news event, which is going to be going down in about 15 minutes, and usually when I'm trading FOMC, the expectation is usually for us to get a spike for the first 30 minutes after the 2 p.m. release in one direction, and then a reversal somewhere between 2:20 and 3 p.m. during the press conference. You can backtest this. You can take a look at it for yourself. Usually there's a pretty consistent relationship there in the market doing one thing with the initial release and then flipping and doing the opposite about 30 minutes later going into the press conference. And so if we take a look at this week's Red Folder News, which, by the way, this has been like one of the most insane weeks in terms of red folders, like the most red folders I've personally seen in a single week, in 5-day period, in a long time. And we've got numerous interest rate news. Obviously, we had AUD interest rates increase on Monday. Canadian dollar decided to keep their interest rates the same earlier today. We got USD FOMC federal funds rate releasing in about 15 minutes. Press conference, as you can see, is at 2:30. And then we got some more interest rate news going into later today with the yen, as well as Swiss franc, GBP, and euro tomorrow. So it's like just an absurd amount of interest rates being updated this week, which is kind of crazy. It's pretty rare we'll see all of them all at once, but we're pretty much having that this week. So anyways, focusing on what this session is all about, these are the red folders that we're going to be paying attention to, and this will have an impact on all markets. It doesn't matter if we're talking about currencies. Of course, currencies are going to have an effect. Any US dollar pair is going to be affected, and even pairs that aren't, USD pairs will still be affected by this release. And you also have things like gold, silver, indices, all right, stocks, crypto. Everything is going to be impacted. If we take a look at the crypto calendar, a lot of people don't know you can do this on forexfactory.com. You can actually filter out the high impact news events that will have a direct impact on crypto. And of course, you can see the only ones for this week is this news event that we're going to be trading here live together in real time. And so metals, same thing. Obviously, we're getting all of the news folders, but if we filter out just the red folder news, the ones that are going to have the biggest impact on metals, FOMC today, and then we've got obviously the yen interest rates, as well as the press conference for tomorrow. I believe this is in relation to the euro, ECB, European Central Bank, exactly. So yeah, man, it's going to be a good day. I'm looking forward to today's trading opportunity, if there is any. Maybe there's not going to be any, and we'll still have a good time. We'll still vibe out together, and it's going to be good, man. So a couple of things that I'll overview, and I did discuss this on this morning session for those of you guys that were there. But, there was a good inversion opportunity on gold this morning at around 9:30. We had good entry opportunity that was provided, and, I didn't want to chase the buys after we had already seen, a pretty considerable move. It was like a 450 pip move from that price level of around 49 or 48.40, I should say. So I haven't personally taken any sort of a position on gold today, but there was a good opportunity earlier this morning. And what I'd like to see with FOMC, usually this is my anticipation, and I did mention this a little bit earlier, but it's for us to get a move in one direction and then a reversal in the other direction. So usually I'm not looking to, position myself before the news release, but after that 2 p.m. release is when I would be looking to take trades. So waiting for that initial reaction, seeing how price develops over the span of 5, 10, 15 minutes, and seeing if there's an opportunity for me to, execute a position after the release is usually how I'm going about it. For gold, it's a little bit interesting because we've already seen the vast majority of sell-side liquidity taken with today's trading. We've actually had a pretty volatile day, before FOMC, which is usually wouldn't expect this kind of volatility prior to a big red folder like what we're about to experience. And when we do see something like this, that can sometimes mean that the news event will not be, it'll kind of be anticlimactic. Like we don't actually see that crazy of a move with the red folder news. We'll see what happens. Maybe that's the case today, maybe it's not. I'm still anticipating some good volatility. But with that being said, the vast majority of sell side liquidity being taken, I don't really have any reason to be looking for shorts. That's just me personally. You know, I wouldn't look for shorts today just because of the fact that we've already seen a pretty considerable move lower. I wouldn't be opposed to seeing this where we sweep one final time all of this liquidity and then taking longs to then target the other side of liquidity. That would be my preference on gold today, and we'll see what happens. We'll see if that ends up playing out or not. But ultimately, that is going to be the anticipation. You guys, is my screen frozen? Hold up. Let me see if I can reset this for you guys. Are we good now, or is it still frozen? Is it good? We should be good, right? Oh, full port for you, brother. That's hilarious. We only see your trading view chart. The screen frozen. Okay, my bad, ladies and gentlemen. I was just seeing the chat box. Okay, well, this is what I was saying. I think we're back now, right? We're back. We should be back. Yeah, I'm pretty sure it's good now. Okay. So what I was saying is we've already taken a considerable amount of liquidity today with this sell-off on gold. We already took these lows. We already took this low, which this is a very considerable swing low from February 17th. And so a lot of buyers have already been taken out of the market. Realistically, the next area of liquidity for us to capture is this low, which is at like 4,700, just below 4,700. So I don't really see us selling off any more than we already have today, unless it's to capture anybody that took buys over the past couple of hours. This is kind of what I would be looking for in terms of opportunities on gold. That's really what I would like to see. That's like Don's perfect world. What I would want to see is at the very least a sweep of these couple of lows to then potentially consider buys. But even better than that would be we get a full sweep of all the liquidity from like 9:30 a.m. onward, any buyers getting swept, to then look for longs from beneath these levels based on some sort of inverse fair value gap. That's really what I would look for on gold today. Again, there's not really much of a reason to take sells just because of the fact that we've already captured like the majority of sell side liquidity. And yeah, I mean, this could very well be the low of the week. Whether this is already the low or we get one more sweep, I'm looking at this as likely to be the low of the week for gold. Maybe I'm wrong, you know, obviously not financial advice. This could be far off from the reality of things, but we've already swept, I mean, a considerable amount of liquidity on the weekly time frame. Daily time frame, I mean, major move, capturing many lows. And so that's kind of the thought process when we're taking a look at gold and really what I'm waiting to see. So there's a little fair value gap in here. I mean, maybe we get a reaction off this for longs, you know, but my preference would be to potentially sweep these lows. All right, if we take a look at this in correlation with silver, I mean, this is like easy liquidity to capture and take out to then reverse. So that's kind of the initial bias and perspective for me on gold. If we were to see a reaction in the other direction, like I said, I wouldn't really be interested in taking sells because there's just not as much, you know, liquidity that's relevant for me to target on the sell side. If we were back up here still and we saw a move higher into like this area, I might take sells to then target these lows, you know, which was kind of the anticipation beginning of the week. But because we sold off and we've captured so much liquidity on the sell side, it doesn't really make sense for me to take sells should we move higher than this with that 2 p.m. release. So this is the initial bias for me. It's either we sell off, capture these lows, and then get a reaction, or we sell off, take all the lows, and then I would look for buys. And I have alerts set at both of these areas. So we'll be notified on gold with what's going on and what to expect. So that's the perspective on Goldilocks. If we take a look at the dollar, you know, the DXY, the dollar index, the bias from the very beginning of the week has been, you know, I mean, ultimately over the next couple of weeks, I want to see price trade back here. Maybe we get that today with some crazy volatility. I think it's unlikely, but you know, you never know. This is an interest rate news event for the US dollar. We've seen crazier things than just price trading into this fair value gap from a release, you know. But Yeah, this gap, I mean, we technically filled it. You can see there's a wick through it from the day after this gap was created. But would be curious to see if we can potentially get a sweep of this. I don't love the price action on the DXY right now. I think this is kind of just like a no man's zone kind of thing, no man's land, I should say. And then I'm not really looking to take any positions right now on the DXY or based off the DXY, which means for Euro USD and GBP USD, there's not really much that I'm looking for. Euro is an interesting point of interest on the daily. I think we have more room to the upside though. GU, same thing. I think we have more room to the upside. So it's kind of just being patient. We did, and so far we have been respecting this order block, but I'm not really convinced that this is enough for me to take longs personally. So kind of just going to be sitting on my hands with the currency pairs until the news releases, and then respond and react accordingly from there. If we're just taking a look at where's the money and asking ourselves that question of like where's the money on these forex pairs, if we just identify and mark out some of the lows, recent swing lows, and then obviously recent swing highs that we have, we can kind of anticipate. I do like how we had a sweep of these highs earlier today, or relatively equal highs. We had a sweep of this liquidity and then we've sold off. But I wouldn't be surprised if we just, trade higher and this is like just a temporary, sell to buy motion. I don't think this is going to have a whole lot of follow through, to be honest. But yeah, I mean, this is something you could look for, buys out of this area potentially. Or I think more likely we just get bought up with FOMC and I wouldn't be looking for sells until we're trading inside the daily time frame fair value gap up here. And I have an alert set on that as well. So that's kind of the perspective for today. Nothing really has developed since my morning session. This is kind of the same thing that I went over on my morning session. But Bitcoin, on the other hand, we've seen a full fair value gap fill on the daily time frame. Now, again, I'm not looking to take any positions until the release in 5 minutes. But for me, my question is, are we establishing this as, and we took all these lows, which was anticipated. Are we establishing this as the low of a leg, right? Kind of like the next higher low of this trading range to then continue higher. I'd be curious to see if that's what ends up happening, what ends up playing out. I like how we've captured considerable amount of liquidity on Bitcoin as well. But again, I'm just going to wait for that FOMC release. It might be, a matter of us missing this move if we wait until FOMC and then FOMC drives this thing higher, but I'm okay missing that because it's also a potential that we get a sweep of all this liquidity as well, right? Potentially, or similar to gold, maybe we just get a sweep of this and then go higher. So I'm not really interested in jumping into any positions until the 2 p.m. release. But I do like the price action on Bitcoin. I like how we filled that daily time frame fair value gap. We're starting to get a reaction from it. The question is, do we have any more room to the downside first before, considering buys? And again, if the daily time frame gave us inversion on this fair value gap, I'll be looking even more to the downside than what we've seen on BTC, and Bitcoin's been kind of weak over the past little while. But again, it's undeniable the amount of liquidity that we've captured here. This could very well be sell to buy motion from an institutional perspective. So let me check out the chat. BTC longs. Yeah, I like Bitcoin longs. I can't personally justify longs until after 2 p.m. personally. Like, I would rather this and then take buys, right? Because these news events are just an excuse to capture liquidity. And so it's like, where's the easiest liquidity for Bitcoin to capture? It's all the lows from this morning, And then obviously, like, the nearest swing high we can target is the one that was set at like 930, My buys for FOMC is for us to sweep this low and then trade higher on Bitcoin. Gold, same thing. And then EU and GU, I'd like to actually see these things trade higher. But we'll see what ends up happening. I'm full porting my funded. I do not condone that. I do not condone that. Let's see. Somebody said, are you profitable? Definitely not. Definitely not. Cancel. Just kidding. I placed a buy, 48.62. SL is 48.35. TP 49.74. I mean, you got a good buy price. I would probably go break even before news if I was in that same trade. USC JPY. We don't really take a look at UJ too much, but if we pull this up, we can take a quick gander before 2 p.m. Ooh, I like this to go higher, but I think a nice retracement could be favorable. If we get a pullback to this on the 4-hour, I would look for potential longs, personally. All right, again, we took out considerable amount of sell-side liquidity. Seeing something like this could be potentially opportune. But I don't usually trade UJ, but I like that. I like the looks of that, personally. You know, we just took out this high as well. You could look at this as a, quote, market structure shift. You know, we didn't get a whole lot of candle closure through this zone, but this is what I would be looking for on UJ. I might actually set an alert on that. It's kind of cute. But we got about a minute until the initial release, and as I was mentioning, ladies and gentlemen, usually I'll wait for the initial release and the volatility that comes with that, and then look to actually position myself closer to the time of the conference and play a reversal. Usually that's what's been the most ideal for me when trading FOMC. So again, it's like if the 2 p.m. release gives us this, I would then consider buys at around 230, 220, or if we're trading in this area and we get an inversion, you know, stop beneath this low kind of thing, to then target the other side of liquidity, which could be these two highs. We did already take this high as well, you know, as liquidity, so maybe we go lower, you know, but something along these lines. So it's like initial reaction lower, then higher is kind of what I would be looking for. But let's see, man. Not really a whole lot of volatility from a glance, or at a glance, with the 2 p.m. release. We're kind of just chilling right now, but usually it takes a little bit for it to actually kick in. Yeah, so they held the rates the same, which was to be expected, as forecasted. And looks like we're going to see gold trade a little bit higher as of right now. Very low volatility move so far, you know. But we'll see if any more volatility comes in. Seeing Euro trade higher, seeing GU trade higher, which means DXY is going lower. Stream on Kick. I just stream on YouTube because that's the easiest for me to set up right now, because I've already streamed here before. Otherwise, I'd be on Zoom, to be honest. Zoom has lower input delay. I think there's like a 15-minute delay on the stream. So it's like everything that we're seeing on stream is, you know, happening like 15 seconds beforehand for you guys. But yeah, this kind of, you know, anticlimactic release, again, it's kind of like not surprising to me because of the fact that we had such a major move prior to, you know, 2 p.m. Right? But, you know, this could change when your buddy Jerome Powell goes live, and we'll actually watch him live because I think it's kind of entertaining to watch him live. FOMC meeting live. Yeah, when your buddy says good afternoon, that's usually when some good volatility comes into play. So we'll pull that up closer to 2:30. You guys seen those like funny like meme videos where it's like he's like good afternoon, and then the market just goes insane because you got like AI behind the scenes. It's like anticipating the tonality of the good afternoon to be either bullish or bearish. And then the market goes wild. It's kind of funny. But yeah, I'm not looking to trade this, man, right now. Kind of boring price action, man. This is This is the kind of boring price action you'll get when there's a considerable amount of movement in the morning session. But 2:30 p.m. could be the time we actually see some motion. Where's like the official CNN? We want like the more official release. What's the name of the place that they meet at again? Oh yeah, I guess it's like the Fed meeting. Usually the Federal Reserve streams it, no? Fox. Let's see here. We got a bunch of other traders that are trading it live too. Isn't there like a stream usually on the actual Fed channel? Yeah, here we go. This is the one we want. Yeah, so we'll just wait until 2:30 and then we'll come back and pay attention to that. But yeah, ladies and gentlemen, I mean, kind of boring price action. I wouldn't be opposed. I'm still looking at this for gold. This is what I'd like to see. But again, you know, we're not gonna really trade this kind of chop. Maybe we had a false spike higher and we're gonna sell off as a result of that. But you know, yeah, I'm just gonna be patient with this one, ladies and gentlemen. Some days it's a lot more exciting. Today, not so much, you know. Today, not so much. BTC is actually trading higher so far. No downside wick, just straight bullishness. So I'd be curious to see how BTC behaves as we reach back towards the top of this daily fair value gap. And even on the hourly, we're kind of up against this fair value gap here as well. I doubt we get inversion over the next hour. I doubt we get inversion, but let's see. Oh man, my light died. I'm in the dark, ladies and gentlemen. There we go. Boom. Let there be light. Let's yeah, I mean, this is kind of boring, you guys. We're probably going to be just chilling here until 2:30, and then hopefully at 2:30 there's something for us to talk about. Yeah, the morning was insane for sure. You could be the next TJR. I mean, I don't really have a desire to be the next TJR. All right, you guys, let me know in the chat. What can we go over in the meantime? What kind of questions do you guys have? What kind of things would you guys like to know in the meantime? We got about 25 minutes that we'll just be chilling here. Feel free to drop a like on the stream as well, ladies and gentlemen, if you like the vibes. Maybe you don't like the price action, but guess what? At least you can leave a like on the video and enjoy the vibes here. You know, you can enjoy the vibes. Earlier this morning, when we were on session, we took a look at FX replay and the battles feature. We actually did a battle earlier this morning. Maybe some of you guys have. Maybe some of you guys were there this morning. It was kind of a fun time. But they've come out with a battle feature. FX Replay is like one of the best backtesting platforms in the industry, and they came out with a battle feature where you can literally go up against and face off against one another, and it's like a gamified version of backtesting where you can go into a battle. It's either time trial or profit target, and you choose the account balance you want to start with. Usually it's like simulating prop firms, kind of max participants, whatever, the amount of time that you have. You can choose the assets that you want to trade, up to 5 different ones, and then you have rules. So it's like 2% max per trade, 5% total daily drawdown, 10% total drawdown. And we ran one this morning. It was kind of fun. It was like the first one I've done live with with you guys, and it was a good time. So maybe if there's nothing going on at 2:32, maybe we'll run back a battle or something for the last 30 minutes of the session. But we'll see what the market's doing. One thing a mentor of mine told me that stuck with me is that no position is a position. So you and not engaging in any sort of a trade this afternoon, that in and of itself is a position, right? No position is a position. So it's more about capital preservation and the long-term consistent extraction of money from the market that matters, not so much the needing to be in the market at all times whenever there's a news event or whenever there's opportunity. So no position is a position, and I'm happy to just sit on my hands and vibe out with you guys if there's no sort of opportunity that deems worthy of taking an entry, But yeah, maybe we'll run a battle. I mean, we got 20 minutes till the press conference. Do we just run a battle right now? Are you guys down? You guys down with it? Oh wait, we got other questions in the chat too. Some elevator music. Donny, can you give me access to your indicator? Right now, the indicator is not accessible to anybody on TradingView unless you already had it, because TradingView decided to actually take it down because I was like promoting the free community. So, it won't be re-accessible and published until closer to the end of March, at which point everybody that had access to the original versions will be given access again to the new version. It'll be version 3. And I actually went over on this morning session some of the updates as to the changes and improvements that were made to the indicator. So yeah, we did like a full overview of it. But yeah, right now I can't add access to anybody new, so just gotta hang tight on that front. I've heard of trades by Sa. Yeah, I've heard of him as well. What's your bias on gold? This is my bias on gold right now. I want to see this. How does increases or decreases in interest rates impact the market and currency pairs? This is a great question. Let me pull up a little cheat sheet that I have that kind of illustrates this. Not so much for interest rates, but it illustrates it, and it's the same logic as what I'll pull up. Let me see if I can find it here. Cheat sheets. Fundamentals/news. Yeah, so this is for CPI, but this remains relevant for interest rates as well. But I'll share this with you guys. Pull this up. Where is the here we go. Boom. So this is for CPI. This is CPI and PPI, not for interest rates, but very similar. Well, yeah, next week is kind of like closer to the end of March, you know what I mean? So it's going to take me like 2 weeks just to add everybody. I'm going to do 200 to 500 people a day because there's like more than 2,000 people that have applied for access in the past. So, but this on screen, this is a very similar principle or similar ideology for increasing interest rates. So just pretend that instead of this saying CPI and PPI, this says an increase in interest rates. All right, an increase in interest rates is bullish for the currency. Same as, an increase in CPI and PPI is normally bullish for the currency. So you'll see things like, Fed is then expected to be hawkish, and you'll get rate hikes or no cuts, which leads to yields and capital inflow, which leads to an increase in demand for the US dollar and ultimately the US dollar strengthening. Now, this is more a fundamental thing that you can track. You can actually look at this on different platforms, and you can see the overall chart and fluctuation of CPI releases, interest rates, and all of that. This is like more of a higher time frame correlation that you'll see with price. Usually my anticipation for what the market's going to do with any given news event is going to be based on the liquidity that's present in the market on something like an intraday time frame, like the hourly. because typically the market is likely to capture and manipulate the vast majority of liquidity to then go and attack the other side of liquidity before this actually remains to be, or not remains to be true, but until this really plays out into fruition, or until this comes into fruition. And then the same thing can be said vice versa. US dollar weakness expectation would be a result of falling CPI and PPI, which also can be basically put hand in hand with the Fed expected to turn dovish or bearish. Or they don't call it bearish, they call it dovish, which would then lead to rate cuts or pauses. Rate cuts are usually not a good thing at all for a currency. But again, on something like the intraday time from like an hourly or 4-hour perspective, you'll always see runs on liquidity first before this really takes over. All right, and it could be a couple of days worth of liquidity capture before this really comes into being relevant and truthful in terms of the expectation and reaction that you see in the market. So yeah, that's kind of the breakdown. That was a good question. Just wanted to go over that. Yeah, if you still have access to the inverse fair value gap indicator, that's good. Just make sure you don't delete it off your chart, because if you delete it, that's when you can't re-add it back. My access disappeared. Yeah, it's all good. We'll be getting it back up and running soon. Don't worry. As soon as I can, really. What are your confluences? So, I mean, this is, I feel like I'm trying to rip a battle with you guys. I feel like this is a longer question for me to answer. Let me drop a YouTube video in the chat that kind of goes over what I like to look for and what my confluences are. I also just want to make sure the screen's not frozen again. Okay, yeah, it's good. Sweet. So, really, what I'm looking for is higher time frame price action to be the frame to then me executing trades on the smaller time frame. So I'm just trying to see if what video would be the most relevant for me to share in the chat. I'll just share this one with the inverse fair value gap indicator, because this has literally been my entry model for like the entire year. It's a training on how to use the scanner, but it's the same premise of how I have confluences, like what I'm looking for, that kind of thing. How can I access the IFUG indicator again? Well, it's not accessible to anybody right now. So once it is, that's when I'll be sharing with everybody how to re-add it to your chart. What do you think about gold? This is what I think about gold personally. This is like not an actual position I'm taking, by the way. Let me just take this off the screen. This is just what the indicator is showing. This is my bias on gold. At least a run on these lows, ideally, and then longs, but maybe even a run on this low as well. Never had access to it. No worries. Are you a part of the Primeverse community? Sunbay Life? What would you say is the right time starting an FTMO challenge? There's not really like a right time. Like I would just go for it, you know, maybe just start with a smaller account size. It's kind of like it's like we never think we're quite ready for something, right? But then you just dive into the deep end and, you'll either sink or swim, right? But guess what? With an FTMO challenge, at least it's not your life on the line, okay? You can blow an FTMO challenge and it's not the end of the world. You're going to learn from it and be able to move forward in a way that makes sense, as long as you take the time to reflect on your performance from the first go at it. So I would say now is the perfect time, right? Like if you've been contemplating it, you already have like a pull towards taking a challenge. I would just do it, man. Just do it. If you want, you can take the practice challenge a couple times first, see if you're able to perform there and then buy your first account. It's an option as well. All right, let's run a quick 10-minute trade battle, ladies and gentlemen. Let's run it. Let's run it. Let's set one up here. Time trial, 10 minutes. What pair do you guys want to trade? Just gold? I feel like everybody and their mom just loves gold, you know? So we'll just do gold. 10% max drawdown, 5% daily, 2% max risk per trade. No full porting, ladies and gentlemen, okay? No full porting. 3 moments, that's fine. All right, create battle. And then I'm going to share this in the chat box for you guys. Couldn't figure out how to close my trade. Yeah, it's a little bit, that's actually funny. It's a little bit finicky. Your first time around, like doing it, you kind of are just learning how to navigate everything with the battle, right? I'm trying to paste this in the chat for you guys. Okay, there we go. Did that work? I think that worked. My mom loves gold. Same. She loves wearing it. A bunch of gold diggers. E-trading sports, yo, facts. Trading esports, let's go. Let's go. Set the sell for this to target that FVG and got stopped out before it reversed. Oh, you took shorts on gold? You talking about this? I'm literally just gonna be sitting on my hands until 2:30. All right, I'm gonna start this, guys. We're gonna start this just because I want to be like done in time for the press conference to hear Jerome Powell say good afternoon. So we're diving right in, ladies and gentlemen. Let's get the tunes going here. Jeez. Is the music loud or is the music okay with my voice? If you're seeing this for the first time, what I like to do is hide the volume, go to something like the hourly time frame to start. Bottom right corner, you can change the time zone to be in your own time zone. And then this is what you're going to be using to play the price forward, right? This is back testing. It's a random amount of data. If you're wanting to close a trade early before it hits your TP, let's just say I was taking a random sell here, right? I'm going to go put my long or short position on the chart. I'm going to click order, choose my risk. So we'll do 0.3% for this example. I'm going to click save. And let's say the price is playing out and I want to close. You would just click the X right here. So this is how you would do it, Shannon. I would just close like that. And then it's going to pull up how much you want to close. You want to close the entire thing, whatever. Boom, done. All right, let me lock in. I want to try and win this game. We got 8 minutes. What's cool too is that we're all going to be at different points in time with the data. So it's never going to be the exact same for everybody. So me and sharing my screen, you're not going to get like any sort of advantage for like screen peeking, All right, let's see what we got here. So we swept the highs. This was Wednesday morning, probably the high of the week, maybe the high of the week. Captured this low as liquidity. Probably going to trade lower still. Let's look for a setup on Thursday. It's like trading GeoGuessr. Yeah, kind of, I guess. It's like back testing. It's like gamified back testing, right? Oh my gosh, that was the short, ladies and gentlemen. Damn, was that NFP? It wasn't even NFP? What? That's crazy. Or maybe it was NFP. Oh, Fed Logan. Who is that? That ain't Jerome Powell. Logan must have said something in the morning. This is Thursday. Thursday is probably going to be the low of the week. Maybe. We'll see. Equal lows. All right, let's skip to Friday. What is my preferred trading framework? I like to see higher time frame liquidity captures and then inversions. So I'll see if I can find you an example on like the back testing here. But let's say, here we have the considerable amount of liquidity on the sell side. So I would want to see price take out those lows, and then perhaps we trade into this point of interest. All right, fair value gap and order block kind of overlapping. But even if we don't see that, I would want to see price take the lows and then look for an inversion on the smaller time frame, like the 1 minute, 3 minute, 5 minute, below these lows. So we're already going to take a new, or create a new high here. This is Asian session. We're now moving into pre-New York. Probably shorts for the day. This is what, Wednesday? Maybe shorts for the day. Hourly perspective, we taking any sort of considerable highs here? Yeah, we did. So we took out this high, and we're seeing, so that's like liquidity capture, consolidation, probably a smaller time frame inversion in here. Yeah, like right there. Not the best entry though. Would have been chopping around here a little bit. Back for redemption. Let's go, big dog. Fire me up. He's back. Let's see what you got, man. You got 5 minutes. 5 minutes, man. Let's go. All right, what time of day is it? 8 a.m. Oh my gosh. What is that? CPI. Holy. 8:30 candle went insane. We might take sells here just for fun. I might take shorts on this just for fun. Maybe. I think we'll probably sweep this. All right, now we want to look for inversion if we can get it. Is that a 5 minute inversion? Yeah, I think I like potential shorts here on the 3 minute. Let's see how the next 3 minute candle prints. No risk, no Rari, ladies and gentlemen. We're going for it. Not quite a 1 to 2 at the low. That's unfortunate. Let's see. Maybe back to this FEG. 1 to 1 risk to reward though, man. Come on. It's not ideal. Can we get a pullback on the 1 minute into that fair value gap maybe? Ooh. Yeah, I'm gonna take shorts here. I'm taking shorts on this. 1 to 2. All right, we're just gonna go for it. 1% on the trade. Clapped. Absolutely clapped. All right. It's all good. Let's go into the next day. What do we got? Thursday is PPI now. 1, 2, 3. Let's go 15-minute time frame. Just chopping around. Probably see this. It's hard to say. I would say probably a sell-off for PPI. Yeah. So false spike higher. I'll take shorts off this fair value gap if we get it. But we just sweep considerable amount of sell side liquidity, but I think we got lower to trade here too. That's a fat stop loss, bro. All right, let's see an inversion. There we go. I like this. This looks good. We're in there. Not my ideal price action, to be honest, but let's just hold this here. Let's see what happens. All right, I'm gonna reduce risk on this. Trail a little bit. Let's take out that low. We did wick the low. I'm gonna give this some breathing room. Trailing again. Just give me this sell off here, right to the TP, all right? Yeah, not exactly what we wanted. All right, we're down about 1% here, ladies and gentlemen. We got to lock in. We got 2 minutes here. Caddy's out here. What's Caddy doing? 11%, 100% win rate. All right, I'm sussed. I'm sussed out about this, but maybe he's just hitting bangers, you know? This one's invite only, so it's not even like a random can join. Damn, man. All right, I feel like backtesting in this mode, it's harder to gauge like momentum, you know, like momentum is what will lead to usually my execution in real time, and you can't see it in real time, you know. It's like replayed price, so it's a little bit different. Maybe I'm just making excuses, but let me see if we can take some 15-minute fair value gap. Do we have a little bit more downside? What time is it? 9:15. A little bit more downside. We want to look for an inversion now. 5-minute, that's an inversion as well. Do we get a pullback? Yep. Okay, we'll take a jab at this. Not the best risk to reward, but we're just gonna go for it. PE already. All right, we like this. I'm gonna trail stop again. Give me that push. Bro, you teasing my trailed stop loss here. What time is it? 11 a.m. We might get hit out. Oh, maybe not. I got 20 seconds here. Just bring me back up above BE. Here we go. We like this. We like this. Smack that. Smack that TP. Bro, why is this price action so slow? Is it gonna hit my trail? Oh my gosh. Oh wait, it ended. There we go. $110, ladies and gentlemen. 1 for 2, baby. That's what I'm talking about. All right, let's pull up Jerome Powell's speech, man. This is what we want. This is what we want to really pay attention to.
We're ready on.
You guys ready? He's gonna say good afternoon. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace.
Bro,
While job gains
it's just
have
like
remained low,
every time he just
employment
says good
rate has been
afternoon is
little
so
changed
funny,
in
even
recent
if there's like
months,
no real
and inflation
reaction.
remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation.
You know what I love is that they disable the chat. Imagine this chat was like not disabled. Just like 30,000 people watching the session. And I could just imagine this chat would be absurd. Oh, what's this?
At the end of this year and edges down thereafter.
No.
Inflation has eased significantly from expanding at a slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well.
See that chart drawing.
Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this
Bro,
year.
what on earth is this chart?
3.1% at the end of next year, unchanged from December.
What is this chart?
As is always the case, these individual forecasts are subject to uncertainty.
Does anybody understand what that is?
Committee plan or decision. Monetary policy is not on a preset course and will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment
I'm
to serve the
hammering it,
American
ladies and
people.
gentlemen. It's not working.
Thank you, and I look forward to your questions.
I actually think we might trade higher from here. We just left this low.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come
Colby?
from higher oil
named
prices
you
stemming from
Colby?
the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total inflation, total core inflation, it's about 3%, and some big chunk of that.
I wonder if we might see gold start to jump higher from here, because we had a sweep of this low, traded back into the 15-minute fair value gap, which is like over here, and we immediately got inversion right after. So this might be the move on gold. This might be enough for us to start trading higher, even though this was like Don's perfect world, you know. But we might see this thing just flip from here, to be honest. Curious to see how silver correlates with this as well.
Approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so, there are 19 people, and so 19 reasons, 19 individual submissions, but and if you notice, the median didn't change. But there was actually some movement toward, a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially it is that, the forecast is that we'll be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year, progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Howard.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. Yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on.
Well, even though we're not seeing a ton of volatility, pretty much the initial sell-off at 2 p.m. is looking like a sell to buy on DXY. Euro, buy to sell. GU, buy to sell. GU actually had some reasonable shorting potential, but it just wasn't appealing enough to me at the time for shorts. And then gold's looking like we're going to continue to progress lower. I was thinking this might be enough of an inversion, but this is looking like we're just going to reject and continue. So this remains the bias where the magnet's at.
That there is a potential blow
There's your buddy, man.
coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy.
So I didn't get the second part of your question.
The consumer's going to be potentially diverting money to gasoline from other parts of the economy. There could be
I would love to sit in on one of these meetings, man. That would be so funny. Imagine you're just sitting in on one of these conferences and just taking it all in, and you're like, what the hell are these guys talking about? It's like trying to read hieroglyphics. You're just, and it's by design. Like the whole market and everything is confusing like this by design. Like they don't want people to know what's really going on or what all of this means, and it's by design. By design, in my opinion.
And it's something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. So, we don't debate how long, how do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And you also, what you've written down before you'll be reluctant to move too far away from that just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Look how many hands went
Sure,
up.
in the past, little change since September.
Everybody wants to ask a question, man. Look at that. Everybody's hands are up, man. Everybody.
Production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening
Oh,
right now.
man.
So
An economic
the first thing
yapping
is,
degree.
there is-
That's what you
the
need for
original
sure. To be in that room,
thing,
100%.
the longstanding thing
100%.
that way is that you do look through energy shocks.
This is like so choppy and boring today. It's crazy.
So, sorry, your question was,
What the staff is
Way
saying
more
about,
boring
and has said in the
than
past,
ideal.
so there'd be an offset.
offsets, yeah.
So that's true.
Euro's definitely looking weak.
We're a net exporter of energy, right? So any
I,
effects on
won't be
employment,
considering
economic
longs from here.
activity and spending would be
This is
offset
looking,
to
I
some
mean,
extent
you know,
by the
buy to
fact that
sell,
our
sweeping the
oil
highs,
companies were
retraces,
profitable
fills the
and
majority of the fair
they
value
do
gap. We're
if you
rejecting
ask
2
oil
p.m.
companies,
candles
they're
looking
doing
like we got more
well.
room to the
But then we
downside.
wanna
This
see,
is out of a daily
you know,
time frame fair value gap. Like it just kind of makes sense for us to trade lower from here, I would say.
rise in oil prices
Same with
from where
GU.
they were before.
So we can still get a bounce off this fair value gap, but
And they're
you know, and
gonna-
USD CAD's looking
that's gonna be
kind of
persistent
choppy,
for a
but
very
stronger than
long
weak.
time. So they're not sitting there waiting for oil to go
Yeah,
over
very anticlimactic for
$70
sure.
a barrel, and then they're going to start drilling or whatever.
For sure.
Make a reasoned, careful judgment that we're going to have higher oil prices for an extended period.
If you weren't Canadian, you
So
could run for
I wouldn't
Fed
say there's
chair.
Much of that happening. Not much will be happening now.
I
but some of
mean,
that could
I'm
happen
down.
over time if you see that. But so the net of it would, the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target and looking through the oil price shock would undermine the credibility of your commitment to the 2% target?
You know, we have to do our analysis and you know, think these things through carefully, but of course that's on everyone's mind. You know, we're well aware of the history, and but you don't want to overreact to that. You know, you want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had, you know, we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And you know, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can you know, can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%. And you know, I think it's important that we do that. Very
Yeah,
important.
that's funny.
Nick.
I could definitely be the Fed chair, man. I could read that exact quote that Dayton just put in the chat. It's like, well, we've got a magnet on the upside and a down penguin confirmation, so I have to say that the economy is looking pretty good, ladies and gentlemen. It's looking pretty good, and I would just say, you know, buy it.
That inflation returns to target over the next couple of years.
Okay, so I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not.
What did he just say? We're gonna need to get a calculator out to try and comprehend that one, Jerome.
Of course, what they do is they raise prices to some extent, to the extent those prices are the tariffs are paid by consumers, on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system, and we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system, so that goods inflation will return closer to what it's always been. I mean, it used to be for many years it was negative, and then you know, the year before tariffs came in, it was 0, and it's running at like 2% now. So. And so that's kind of, goods inflation is running at 2%. So that's not coming coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates, or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks, and we feel like where we are now is just kind of on that borderline, the higher borderline of restrictive versus not restrictive. We feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation?
Congrats on the engagement. I appreciate it. I appreciate it. Thank you. Thank you.
It's frustrating.
One thing I found is that with the hammer, if you do like stronger follow through, like big wind up and then boom, it works better. See, watch. Boom. Boom. And if you say boom, it works even better too. Boom. Boom, 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 boom.
So we do, what we expect for next year is continued, what we want to see for this year rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
It's working, ladies and gentlemen.
Thanks, Chappelle. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January.
Did you put a limit, or are you waiting for a reaction? I would just be watching price action down here for inversions. That's what I'd be looking for, in like the 1 minute, 3 minute, 5 minute. But yeah, I would want to see at least these lows get swept, ideally. We did have an inversion in here after sweeping this low, but it was very weak and we didn't follow through with it. So I would want to see at the very least these lows get swept, and then just watch smaller time frames for inversion. And then this is like a 1 minute fair value gap, I think. I don't know how much relevance it's going to hold, but this could also very easily just continue to sell off and we sweep this low as well, which I'm down for. Honestly, I would be down for that, to then take buys below 48.35. But yeah, we'll see. We'll see. So far, we're getting some decent movement. From the 2 p.m. wick higher, we're down about 300 pips, but it took like 50 minutes. It's kind of crazy to think about. Are you sober right now? No, man, I'm litty right now, for sure. For sure. Just kidding. I don't think I've ever run a stream under the influence of. Actually, no, I've done a couple of streams where I've had like a glass of wine or two, actually, now I think about it. But I don't really consider that like, anything crazy. I've never run a stream totally, out of it, we'll say.
Brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet.
Wait.
And I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm
Is he
not
talking
gonna
about stepping
have any-
down right now? Or not stepping down, but like retiring eventually?
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply side story, has changed despite the quite negative number.
Yeah, I think we could definitely trade down to this order block for sure. Like over the next week or so, maybe even like over the next couple of days, perhaps. If we just continue to get sell-off pressure or selling pressure, this would be the order block I'd be looking at. I think daily time frame, though, it kind of makes more sense for us to like take this low out and just be in a state of retracement, you know, on gold ultimately. But let's see, man. Let's see. He said we're just on the Fed and going back to the gold standard. That would be a dream come true, man. I would be slightly disappointed that I sold 70% of my solar portfolio, though, over the past 4 months. I would be a little bit disappointed that I didn't hold it all, if that was the statement that he made, you know. But you'll never go broke taking profit, as they say. But yeah, I like that order block around 47.80. I do like that. Okay, cool, guys. We'll probably stay on here for like another 5-10 minutes. I do have another call I have to jump on just after the hour here. So, you know, it's been fun. It's been a vibe. Hopefully we can get some motion to see some of this liquidity captured while we're here live. And then I would just leave you guys with, hey, look for potential inversions in this area. If we take out this low, look for inversions beneath that low as well. This does look kind of weak. Like this price action looks fairly weak. So any sort of capture of this liquidity, I would be not surprised at all if we continue towards this low as well, to be honest, you know. And then from there, it's like realistically the next order block that would make sense for us to pay attention to is this one, right? And it looks like GU we're trading down into this fair value gap. Won't be looking for buys out of this area, I don't think. Just time of day doesn't make sense, and also I think this is far more likely to continue lower based on what we're seeing. So yeah, man, yeah, Euro as well. I think it's quite likely we're going to take this low and just, you know, this could be the high of the week that was established earlier this morning.
To start taking account of the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks, and you know, so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just
Are you talking about this fair value gap right here on gold? This would be, or are you talking about GU? Probably gold, right? This would be an hourly fair value gap. So if you said 15-minute fair value gap, you're probably talking about this one, right? Yeah, I mean, this would be relevant if we get candle closure beneath this to probably continue lower for sure. But I wouldn't, it'd be difficult to structure sells off of it, you know, because it's like, where's your stop going to go above this high? I mean, that's like 300 pips, right? So it's kind of difficult to justify the sells, but yeah, this would be relevant and pretty telling inversion, to be honest. Like us getting that inversion would be certainly a sign of weakness. So any sort of buying that you decide to do on gold, I would say, you know, definitely wait for liquidity captures and inversions, and then ideally we, you know, look for the buys beneath this wick, I think. based on the price action we're seeing right now.
That, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
Imagine like you're a trader, right? And you've got, you got your partner with you, and you're like, hey, we're going to go on a very special date today, and you both trade. And it's like you bring her or you bring him to the FOMC press conference live, and you just have to sit in on the room. And instead of you paying attention to all the jargon, you're just like looking at the charts on your phones, like just ready to go. That would be a kind of hilarious date night idea. You're just posted up for the FOMC press conference. You're like, babe, I got like the best day planned ever. We're going to go to the FOMC press conference. We're going to trade PPI news in the morning before that. And then after that, we're going to full pour Asian session gold sells. It's going to be amazing. And then you have an amazing day, right? And then you go out for dinner and you use your profits to pay for your dinner. I mean, come on, man. That's a vibe. You also might get broken up with, but hey, it's a vibe, So we're seeing a sweep of these liquidity or these lows as liquidity, which is good. Curious to see what happens in this fair value gap on the 1 minute, but yeah, with a glass of wine. Yeah, you're like in the press conference with a glass of wine at the back, just like, oh man. So the magnet does work, ladies and gentlemen. Anybody that tells you that the hammer and magnet approach don't work clearly don't know what they're talking about. Clearly, this is the secret to profitability, okay? I'm totally joking, by the way. This is like solely for satire and the meme more than anything. But the sell-off made sense. Kind of annoying that it took so long because, if we were here for another 15, 20 minutes, we might be able to structure something together on the session. But I do have to jump off for a call, ladies and gentlemen. And so I'm going to leave it at that for today. It was a good session. We had a good time, even though there wasn't anything too crazy, that went down. All I would say is this, right? If we are to see any sort of, smaller time frame inversion, either out of this, 1 minute fair value gap, or more ideally, when we sweep this low at 48.34, if we sweep this low, you could certainly look for buys. We could go much slower than that. I would wait for at least a 3 minute or 5 minute inversion if you're going to take a buy. But yeah, man, let's see what happens. Very anticlimactic FOMC 2 p.m. release. We'll see what happens over the next couple of hours and going into the Asian session tonight. But I wouldn't be surprised if we get a little reaction off this area, or if we get a sell-off to capture this wick and then, reaction from there. Let's see what happens, man. Let's see what happens. So, yeah, I'll be back. For those of you guys that are part of the Primeverse community, I'll be back on Sunday for Market Outlook, and I'm looking forward to that. And have an amazing rest of the trading week. Also, if you're in Primeverse, definitely tap in for the other educators live sessions that we got going on this week. And if you're not a part of Primeverse, you should be. But, you can reach out if you have any questions about that. You can message me on Instagram, whatever the case may be. And guys, leave a like on the stream, man. If you enjoyed the vibes today, if you had a good time, If you like the you know, the jokes, the overall, you know, vibe as a whole, definitely like the stream. Feel free to, you know, leave some love on the stream, drop some comments, whatever the case is. Even though we didn't take any trades really together live, although some of you made some money on gold selling off, which is great, we still got to vibe out together, man, you know, and that's all that matters. So appreciate your guys' time, much love, and catch you all on the next pop-up live news trading session, and on Sunday as well for those of you that are part of the Prime Burst community. So peace out, everybody. Chat to y'all.